Hey traders, Nick here looking at Apple, and on a day where the equities fell 3.5% on the NASDAQ, a big chunk of it was Apple, down 6%. I don't know where it closed, just under 6%, after being down already. So here it is from high to low. As far as the spike on earnings is like 15%, or at least from high to low, so a little less than that on the closing basis. So let's call it down 10%. I think it was a $50 billion depreciation in the capitalization just from Apple alone. So needless to say, there's fear. And if you looked at a lot of the ways that people look at fear and panic, there was definite panic today, even though it didn't look like it, but it was systemic selling. So it was something to pay attention. All right, so it had several breakouts, and it had a huge rally from low to high. So when it falls 10%, it feels like the end of the world, but it's not even halfway. So where's the next line to look at? And this is the point of this video. I would have thought that, first of all, there are several lines in between, but they just sliced through everything. It gapped down, so now there's a gap open here, but there's a gap open down here. Not sure if they have enough mustard to go to 175 or below. Minutes to go today. There was a flash to 182.9. Someone said it's some sort of a moving average of sorts. I'm pretty sure you can draw moving averages throughout the chart and find it touching one of them. 250 day, 200, whatever it is. Anyway, I am more of the school that says, okay, what happened here last time? It was around here. So in this case, it was right here at 183-ish, the low. And I look, this has been a significant level from before. And let me mark it up. Let's bring the scratch pad so we can say, okay, think out loud. So this is the zone I'm interested in. And it's a zone because it's not a hard line in the sand. Not to me, it's not. Okay, so something happened here. I'll zoom out a little bit more. I put a box here for a reason at the time it happened. It was a neckline, so it's a significant level. So I'm going to call this whole area significant. And this makes it, draws kind of a line in the sand, this and that. This island top, whatever you call this, reversal, it was boom, and then one day it spikes up, and then within 2 or 3 days it completely reverses and closes below it, and then shoots downhill. Mind you, this was the Christmas debacle. So the whole market, it's not like it's an Apple problem. This time it's the whole market, but it has an Apple twist to it. And what it was is the fact that the tariff war got escalated because the U.S. imposed its extra 15 points. So now it's up to 25% on 250 billion or 240, I can't remember, last Friday. So today China retaliated, smaller and took a lot longer, but kind of in two facets. They'll stop buying this, and they'll add to 60 billion of that. So Trump, just after the close today, not Trump, the whatever bureau that handles that, launched the review process in order to add the 25% on the rest of the imports from China, which is another 300 and something. So the total is 540 billion that we import from China, and right now it's 250 of them already have the tariffs as of Friday. Maybe they're phased in, I'm not sure about the details. But now the threat is, okay, within the next month, they can add the rest. They're starting the process to make it feasible for President Trump to say, okay, let's do it. So now they have to do a study, they have to go pros and cons, and I think the earliest they can go to market with it is late June, 6/24 or something like that per CNBC, I'm not sure. But that's just days before the G20, which is when the U.S. and China leaders are supposed to, quote, talk. Now, I find that hard to believe. But anyway, so now we know that there's headline threat to linger for about a month. And Apple is right in the middle of it because it's a weapon, economic weapon, to say, okay, I want to impose tariffs on this or that. Apple, last I checked, was like 22% of their dollar depends on China. I'm not sure about that, but I saw it, so I'm quoting it. So it's a significant amount, but it's not going to cripple the company, and unless there's some new headline that comes up. But why would you, China, who benefits greatly from having Apple in there, kick Apple out, so to speak? Because the solution that to avoid these tariffs is to source it somewhere else. I also read an article about the fact that Apple makes most of the stuff here, and more so, it assembles them over there. So a lot of the process is controlled here in the US, but it sends it out for cheap labor. That's my understanding. If that's the case, it should be a relatively easy switch, but I know it's not because they're a big employer over there indirectly. All right, so it is risky from that standpoint. But then math kicks in. It's like 15 PE trailing, 15, 16, 17, something like that. So it's pretty cheap. It's always been cheap. But that usually makes the floor somewhat stable. Plus, recently they've switched to services. Focus. They stopped reporting unit sales, so they eliminated that headline. Oh my gosh, I missed by 2 iPhones. So now it's, hey, are you delivering on the overall picture? You promised me X dollars on top, X bottom on the bottom. Did you do that? And where are you guiding for next? That's all I need to hear. Who cares what happened in between? Kind of. But now it's more of a service company, and they have billions of people's attention with their phones, so it's a matter of just turning it on, the service, and boom, they've got a market right away. So the fundamentals are there. It's a matter of picking the right place. So I expect some support here. If not, they might target this zone, and this would be pretty neat because this is a neckline, correct? So here was a neckline on the way up, boom, resistance, and then they broke out from it. It makes sense that if this fails, they test it. Below it, there's another neckline, which gave us another rally. So pick your lines. So I would say there is support here, there was support here, it failed, so there is support here, there is support here, and there's support definitely here. This green line, I'll go see where it came about from, this green box here, how far back. So it's a matter of time frame. If I want to own Apple for a really long time, this is not going to change my mind. A little dip here is not going to change my mind. I'm going to switch from a daily to a weekly chart, and now we have a little bit more perspective. So this is August 2017 right here. This was resistance, and then it broke through it and pivoted around it a few times, and we might be headed towards it again. Again, the resistance, you can call it resistance here too if you want. Broke through it, kind of support, kind of support. You know, the Christmas debacle, support if you say, okay, the Christmas we went too far, and here we are, we might dip to it. And if we are, this I think would be a definite entry point for a whole bunch of people who are in it for the long term. I think all the way down here, I don't know how and when Tim Cook pulls the trigger on buying. As far as the buybacks, they've committed. So you have defense. If I own the shares, it has defense. There's the company itself that's going to do a whole bunch of buybacks, committed to it. There's a dividend that gets bigger and bigger as far as yield as the price falls, and just a matter of math. And then you have people like Buffett, etc., that can add to their position. I'm not sure if he can. He might be at a level where he can't add anymore without some legal stuff going on, but you get the point. Fundamentally, if I cannot risk money on Apple for the long term, I really should not be investing because the whole market is going to fall apart. That's my big idea thesis here. Now it comes back to which level is good. I'm not sure we can get a lot of detail if I go granular because the fall has been so fast. We can on the way up. So know that a bounce to 190 will face resistance. A bounce to 198 will face resistance. 198.5 to be exact. A bounce to 201 will face resistance. So the daily is probably the best look here as far as finding support. Okay, so here's 6-hour charts. It doesn't tell me much more. 184 should hold, needs to hold, otherwise it opens the door to fill that funky gap I just noted at 175. So pick your level. I shouldn't panic out of quality stock, but the stock market panicked on Monday. 600-700 points down on the Dow, 3.5% down on the Nasdaq. So that is a pretty substantial drop. Let's see. Do I have FANG? Yeah, I have FANG. Here's FANG. So it kind of looks like Apple, the drop. So the whole market is getting punished. Apple has a little twist. It's kind of like a canary in the coal mine type of a deal, where if you see it find footing, then China debacle should be worked out of the part of the tizzy where the market's having a conniption about. Apple is a great company, not my favorite for products. I personally do not buy its products, and I personally don't like what Tim Cook is doing. But hey, he has the benefit of the doubt with the investors. Who am I to say otherwise? Except that, we can't tangibly see any exciting stuff he's done, but maybe the most exciting stuff that he's moved the company into services moving the company into services versus products. I'm not sure. It's to be determined long term. But for now, I'm not a fan of his, but I'm a fan of the company that he happens to lead, which I think is on rails for years to come, and only a gigantic trap would ruin it. So these are my thoughts on Apple.